RaveDAO's volume is now larger than its market cap, and that is usually a sign of a market behaving badly. This matters because turnover above 100% means the float is effectively changing hands more than once in a day. That rarely points to calm organic demand, especially after an 85-fold surge and a brutal collapse. The tension is whether the supported catalyst is strong enough to survive the first reaction and keep drawing buyers once the easy excitement fades. The article said RAVE jumped 62% in 24 hours, but was still about 97% below its peak after a violent round trip. It put market cap near $251.8 million and daily volume around $307 million, or about 122% of market cap. RaveDAO Jumps 62 is the phrase tied to this setup, and this matters because turnover above 100% means the float is effectively changing hands more than once in a day. That rarely points to calm organic demand, especially after an 85-fold surge and a brutal collapse. Those confirmed details matter because they tell you whether this move came from one headline or from several pressure points landing together. The article also said public information around the team, roadmap, and fundamentals was very thin. When volume outruns market cap by that much, it often means a mix of short squeezes, coordinated activity, bot chasing, or unstable momentum rather than long-term holders calmly accumulating. Turnover above market cap often means the float is churning at an extreme pace rather than moving in a stable way. That mechanism is the part traders can miss when they only look at the chart. That affects traders most because the tape can look active and liquid while still being structurally fragile and easy to reverse once momentum cools. This is why the move can look larger or weaker than one headline suggests. In stories like this, the structure underneath the price often matters as much as the candle itself. The missing piece is clean disclosure. Without a clear team, roadmap, and fundamental anchor, it is hard to separate speculative heat from engineered conditions. For searches like RaveDAO Jumps 62, the missing piece is clean disclosure. Without a clear team, roadmap, and fundamental anchor, it is hard to separate speculative heat from engineered conditions. A market can move before those answers arrive, but it usually cannot keep the same pace forever without them. The important point is that price action and structure are not the same thing. A sharp move can be real while still resting on fragile conditions that have not been fully settled. That is especially true when leverage, concentration, or technical positioning is doing part of the work. Watch whether volume normalizes, whether price can hold round number attention near $1, and whether any real project disclosures appear before the next volatility burst. Timing matters here because the next clean signal can separate a durable move from a temporary burst. If that signal confirms the story, confidence can rebuild quickly. If it fails, the move can unwind just as fast. The broader consequence is that traders are not only pricing a chart. They are pricing confidence in the mechanism underneath the chart, whether that mechanism is supply, leverage, collateral, or narrative follow-through. That is why this story matters beyond one intraday move and why follow-through is the real test. Watch whether volume normalizes, whether price can hold round number attention near $1, and whether any real project disclosures appear before the next volatility burst. The practical takeaway is simple. Watch execution, watch the key level or flow that matters in this story, and do not treat an early move as proof that the final answer is already known. The market still has to validate it.